Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us, as always, to talk all things markets is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
As we get things started today, there's plenty of things for us to talk about, but let's recap what happened this week in the markets.
Yeah, on the cattle side this week, cash cattle were 35 cents higher on the week. If we look at those feeder cattle markets, they were anywhere from steady to $5 higher on the week. On the future side, the August live cattle futures contract was up $3 for the week, and the August feeder cattle futures contract was up a little more than $7 on the week. On the beef side, the choice box beef price lost another $3.25 this week. If we look on the pork side of the equation, cash barrel and gilt prices were $2.36 higher on the week. The August lean hog futures contract closed up $2.75 on the week, and the pork cutout value gained $2.50 on the week.
Scott, as we take a look at those numbers, really, is it a good feeling? Are we getting into a better place to see both the future side of things increase a little bit, at least this week?
So I think we saw some signs of positive this week. I still think when we're looking at markets, we have large supplies of really all meats that are meeting what's a less than clear demand side of the picture. And I think that's going to continue for a while as we think about how COVID-19 affects some of the reopening plans of some states.
Gosh, that amount and demand uncertainty, the amount of product that we have and the demand uncertainty really leaves a lot of questions and a lot of, I guess, maybe open or leaves us open for a lot more volatility in the coming weeks and months.
Yeah, so downside risk and volatility, I think both. If you take very weak demand against those large supplies and you talk about an export situation that maybe gets a little less strong as we get late in the year, one can be very pessimistic. However, if we can start to see some reduction in COVID cases, get some economy recovery continuing to happen, we could be on the plus side as well. So more volatility, but I do worry about that downside.
Let's talk slaughter numbers this week. We've seen some, again, really overall a fairly impressive recovery to our processing capacity and the ability for these guys to keep this many animals moving through the supply chain and hopefully starting to dig into the backlog on both the cattle and beef side.
Yeah, if we start on cattle, USDA is estimating for the week ending July 18th, 650,000 cattle, 2.518 million head of hogs. Both of those numbers are actually a little lower than where we were last week, down 7,000 on cattle, down 75,000 on hogs. Respectively, those are down 1.1% and 2.9% relative to a week ago. Those, as you mentioned, are still strong numbers. It just reminds me to keep saying we need really strong processing to happen on a weekly basis for the remainder of the year to ever think about starting to get ourselves dug out of what are a lot of inventory of hogs and cattle.
Scott, let's talk retail prices. And we saw some recovery last month. Looking at this month, though, a little bit concerning again as we take a look at those numbers.
Yeah, so some very high retail prices that we see from the June data that we got this week. On the beef side, the choice retail beef price, $7.56 a pound. That's just down a couple of cents from where we were in May. So still very high beef prices. On the retail pork side of the equation, we came in at about $4.25 on retail pork price. That's up about 20 cents from where we were in May. So as we talked earlier with some concern about domestic demand, we're pushing still higher retail prices to consumers out of that report.
How much does the overall economic picture come into play when we look at these prices that are maybe a little bit higher than we expect?
So certainly to an extent, I think if we backed up to June and remind ourselves where we were with COVID at the time, we probably had a lot of optimism as we were still on that kind of downward trajectory, which I think gave us some stronger demand in June. So I think that has a little bit to do with where retail prices were, and just the fact that we're still trying to get ourselves worked out of what were some tight supplies there for a period of time to consumers as processors were slowed down.
We talk a little bit about the part of that recovery, though, is that farm to wholesale price has changed significantly, especially on the beef side of things.
Yeah, absolutely. So if you look at the data for June, we came in at $1.35 on the beef farm to wholesale spread. That's down from what was a $3.90 spread for May of this year. And just to give us a little bit of context, for 2019 in June, we would have been at a 95-cent farm to wholesale margin on the beef side. So it has been much larger. That $1.35 gets it back closer to where maybe we would have expected it, but still a very wide margin. On the hog side, same thing, so we're talking about a pork farm to wholesale spread that's 81 cents in June. That's down from the $1.19 that we saw in May. But just for perspective, in June of 2019, we were at 50 cents.
Consumer sentiment dropped this month. As we take a look at those numbers, how much of a role does the increase in cases and reported cases of COVID maybe come into play as we look at those?
Yeah, I think that's had a lot to do with what we got in the July data this month. Preliminary for July shows a 6.3% decline in that overall index of consumer sentiment relative to June. And when you look at the components of that overall index, the index of expectations fell 8.4% in July relative to June. And again, I think a lot of folks concerned about the additional new cases that we're starting to see in some parts of the country.
Scott, we talk a lot about the role demand plays in price support for both beef and pork. And a lot of that is export demand and trade data and those types of things. One of the things I want to talk about, I thought it was interesting, the U.S. Meat Export Federation released a study today talking about the impact that red meat exports have on prices for corn and soybeans. And looking at the data, just glancing at it, they reported that in 2019, beef and pork exports contributed to more than 12% of the per bushel price of corn, and pork exports contributed 9% to the per bushel price of soybeans. So as we look at the big picture of agriculture, how important is it for our exports to continue to grow, not just for producers of beef and pork or cattle and hogs, but for corn and soybean producers as well?
Yeah. So it is very important. I all the time will say, if you take corn and soybeans, and unless we have a weather event that affects the supply side, we're talking about flat to perhaps even increasing supplies of corn and soybeans coming in front of us. So if you want higher prices, you have to grow demand. And I sometimes say, ethanol and biofuel certainly was part of the growth in demand that got us higher prices for a period of time. But looking in front, it's really the livestock side that I think could have some real positives for corn and soybean producers as we export more beef and pork outside the United States. So I'm not surprised to hear those numbers from USMEF. I think it just highlights that if I'm a corn and soybean farmer, my future depends on what happens in the livestock side as well. And so getting stronger beef and pork exports, uses more corn and soybean meal, all of that's a positive that washes over into corn and soybean producers as well.
And not just exporting more to the markets that we're already players in, finding those new markets and expanding maybe markets we're not necessarily as large in as well.
Yeah, that's right. I sometimes will say this is a treadmill, just like we sometimes talk about producers having to get on that technology treadmill and finding less expensive ways on a per acre basis to grow crops, let's say. I keep saying on the export side, you can't rely on the same old countries year after year after year. Yes, we can get some growth there, but we have to build new markets going forward. And if you think about where world population is at. In some of those markets that maybe we haven't been in traditionally, that could be those new growth areas for us.
I think it was also highlighted as we saw those trade disruptions with Mexico, Canada, and China over the last few years, and us having to restore those as well.
That's right. Trade is certainly can be abruptly slowed as a result of a number of issues, and trade agreements and how we treat each other country to country is certainly a part of that.
Scott, that's really all the new information we have for this week. Looking ahead to next week, it's going to be a very busy Friday for us.
That's right. So next week we'll get cold storage, livestock slaughter, and then we finish the week with both the July overall cattle estimates as well as cattle on feed.
Shoo-wee. There's plenty for us to talk about next week. I
Right.
hope you're staying cool. I know it's like pushing 100 degrees here in my part of the world, and I know it's not cool where you are either.
That's right. It's nice and hot and humid. It's July in Missouri.
All right, Scott, have a great weekend. We'll talk to you next Friday.
You too, Megan.
Our weekly livestock market update delivered to your email box every Saturday morning. Visit our website, brownfieldagnews.com. Click subscribe. You can also submit questions and comments there as well. And for all of the really great Brownfield podcasts, go to brownfieldagnews.com/podcast. Have a great weekend. I'm Megan Grebner for Brownfield.